Welcome back to this reading session. Today, we will go through management discussion and analysis of AGI Greenpac Economic Review. Global Economic Overview. The global economy remained resilient in 2024 despite geopolitical disruptions. Global output grew by 3.3%. That's an important statement, maintaining a steady pace that remained above recession thresholds, though still below pre pandemic levels. Inflation showed signs of cooling. A positive remark here, driven by sustained interest rate hikes and labor markets eased slightly, supporting stability. Real household incomes improved with nominal wage growth and falling inflation, even as weak consumer confidence dampened spending. Global merchandise trade increased by 2.9% in 2024, outpacing GDP for the first time since 2017. Growth was uneven. The USA remained strong, the Eurozone struggled, India surged, and China slowed. Geopolitical tensions, including the Ukraine war and ongoing conflicts in the Middle East, disrupted trade routes and energy flows. Beginning in January 2025, tariff announcements added complexity to the global trade landscape. Despite the trade rebound, disruption risks remain high amid resurfacing protectionist pressures. With inflation easing, central banks began shifting course, eyeing or initiating rate cuts to stabilize global conditions and sustain growth. Outlook. Looking to late 2025 and 26, trade policy is set to become a key driver of global economic trajectories. The WTO projects a 0.2% decline in global trade for 2025, reflecting rising trade barriers, policy uncertainties, and ongoing geopolitical tensions. Furthermore, the conflict between Israel and Gaza, alongside broader Middle East instability, adds further strain on global trade dynamics and energy markets. These trends could potentially raise stagflation risk, though countermeasures like tax cuts and deregulation could support investments and business confidence. Governments will need to balance industrial policy goals with strategic trade alignment to protect global competitiveness. USA tariffs and regional slowdowns, particularly in North America and Asia, are expected to weigh on forecasts. However, some developing economies may benefit from trade diversion as supply chains shift. Economic connector nations with strategic geography and trade agreements are likely to play a pivotal role in realigning trade flows. Inflation is expected to moderate but remains exposed to recurring shocks from supply chains, geopolitical, and commodity prices. Central banks are set to recalibrate policy but will proceed cautiously given inflation risk tied to trade, wages, energy, and food. Global monetary policy will remain fragmented, with each central bank responding to local and global dynamics. Changes in USA tariffs are also expected to reshape global trade and trigger a reassessment of economic forecasts. Now let's move towards Indian economic overview. India has emerged as the fastest growing major economy over the past decade, doubling its GDP from US $2.1 trillion in 2025 to US $4.3 trillion in 2025. It's a very important statement showing the economic growth of our India, outpacing all other major economies and solidifying its position as a global economic force. The country's growth has been driven by structural reforms, rapid digitalization, and a favorable demographic profile. Strategic investments in digital infrastructure, financial inclusion, and manufacturing have boosted productivity, while the services sector remain a key growth engine. Public infrastructure spending and a push for self-reliance in critical sectors have further accelerated momentum. India has overtaken Japan 4.4 trillion US dollars GDP and became the world's fourth largest economy, reflecting strong macroeconomic fundamentals, prudent policies, a stable banking sector, and fiscal consolidation. Inflation has largely stayed within the RBI's target band, and non performing assets are at multi year lows. Despite global headwinds, India continues to demonstrate resilience, recording GDP growth of 6.5% in FY 2024-25. That's an important point stating the GDP growth of India. The domestic economy remains stable, supported by structural strengths and sustained reforms. Outlook: India's economic outlook remains strong, with projections indicating it could add US $1 trillion to its GDP every 1.5 years. That's an amazing amount of value India is going to add into its GDP, on track to become a US $10 trillion economy by 2032. This growth is driven by consumption, investments, expanding trade ties, and rising FDI inflows. Manufacturing and infrastructure are gaining momentum through initiatives such as Make in India and the National Infrastructure Pipeline, while the digital economy, powered by fintech and startups, is boosting productivity and inclusion. Improved ease of doing business and assertive economic diplomacy are attracting foreign capital and integrating India into global value chains. However, headwinds persist. Geopolitical tensions and oil price volatility could impact trade and fiscal stability, while domestic challenges include inflation, rural recovery, and climate related disruptions. To sustain momentum, India must deepen structural reforms, enhancing governance, simplifying regulations, enabling labor flexibility, and expanding global integration. With continued policy discipline, India is well positioned to become an advanced economy by 2027. India is well positioned to become an advanced economy by 2047. Packaging Industry Review: The global packaging market is poised for strong growth, with projections indicating a rise from US $1.14 trillion in 2024 to US $1.38 trillion by 2029, at a CAGR of 3.89%. So the global packaging market is going to grow at a cumulated annual growth rate of 3.89%, driven by surging demand in Asia, particularly in India and China, large food and alcoholic and non alcoholic beverage sectors. Additionally, the global shift towards paper and paperboard packaging is also gaining momentum. India's packaging industry is poised to nearly double, rising from $84.37 billion in 2024 to $142.56 billion by 2029, driven by a strong CAGR of 11.06%. So India's packaging industry is going to grow at a CAGR of 11.06%. This growth is fueled by rising demand from processed food, personal care, pharmaceutical, alcoholic and non-alcoholic beverage sectors, underpinned by increasing incomes, urbanization and evolving consumer lifestyles. Sustainability is reshaping the industry. There is a growing shift to eco friendly materials as brands respond to consumer and regulatory demand greener alternatives. Meanwhile, advances in materials, coatings, and printing are enhancing packaging performance and shelf appeal, making packaging a key brand differentiator. Glass packaging products. Industry overview. The global glass packaging market is valued at 67.28 US dollars in billions in 2024 and is projected to reach $93.69 billion by 2032, growing at a CAGR of 4.23%. So this is about the global glass packaging market, which is going to grow at a CAGR of 4.23%. The Indian glass packaging market is expanding steadily and is valued at $6.76 billion in 2025 and is projected to reach $8.35 billion by 2030, growing at a CAGR of 4.31%. So the Indian glass packaging market is going to grow at a CAGR of 4.31%, which is quite similar to the global glass packaging market. Its rise reflects increasing industry and consumer confidence in glass as a reliable, sustainable, and high performance packaging solution. Growth drivers and trends. Increased demand from growing consumer base. A rising population and a growing middle class are driving increased demand for packaged goods, particularly in the beverage, food, pharmaceutical, and personal care sectors, where glass packaging is preferred for its safety, sustainability, and premium appeal. Rising income and increasing spending power. Increasing incomes and disposable spending are fueling demand for premium and branded products, especially in urban areas where consumers are increasingly health conscious and aspire to higher quality packaging like glass. Increasing investments in end use industries. Significant capital investments in key sectors such as alcoholic, non alcoholic beverages, and pharmaceuticals are leading to greater demand for high quality glass containers to meet production and quality standards. Strong alignment with sustainability goals. Growing environment awareness and the global push to reduce single use plastics are driving demand for recyclable and non toxic materials like glass. This resonates with both businesses and consumers seeking eco friendly packaging solutions. Enhanced brand image and premium appeal. Glass packaging offers a premium look and feel, enhancing the perceived value of products, particularly in sectors like cosmetics, personal care, and high end beverages. Its aesthetic qualities contribute to shelf differentiation. Superior product preservation. Glass provides excellent barrier properties, protecting the contents from oxygen, moisture, and other contaminants. This is crucial for maintaining the quality, flavor, and shelf life of food, beverages, and pharmaceuticals. Inert and safe material. Glass is chemically inert, meaning it does not react with the products it contains. This makes it a safe and reliable packaging solution choice, especially important for sensitive products like pharmaceuticals and baby food. Growing preference for recyclable materials. As circular economy principles gain traction, the infinite recyclability of it glass makes it an attractive option for businesses looking to reduce their environmental footprint and appeal to environmental conscious consumers. Stringent regulatory requirements. Certain industries, particularly pharmaceuticals, have strict regulations regarding packaging materials. Glass meets these stringent requirements due to its inertness and protective properties. Versatility in design and functionality. Advancements in glass manufacturing allow for a wide range of shapes, sizes, and colors, thereby offering brands flexibility in creating unique and functional packaging that meets specific product needs and consumer preferences. Consumer perception of quality and taste. Many consumers associate glass packaging with higher quality and better taste, particularly for beverages. This perception can influence purchasing decisions and brand loyalty. Security caps and closures. Industry overview. The global plastic caps and closures market is estimated to reach $85 billion by 2026. So the market would reach at a staggering amount of $85 billion at a CAGR of 5.5% from 2021 to 2026. The Indian plastic caps and closures market is projected to grow from $1.8 billion in 2023 to $2.9 billion by 2032 at a CAGR of 5.12%. So let's see the growth drivers and trends. Increasing demand from tamper evident packaging. Across sectors like food, beverages, healthcare, and especially premium alcohol products and pharmaceuticals, there is a significant and growing need for closures that clearly indicate tampering and ensure product authenticity. Growth in e commerce and supply chain security. The rise of online sales channels necessitates robust security measures to ensure product integrity throughout the often complex e commerce supply chain, boosting the demand for secure closures that aid in tracking and authentication. Rising concerns about counterfeit products. The increasing prevalence of counterfeit goods across various industries is a key driver in the adoption of security closures to protect brand integrity and consumer safety. Premium, premium, Premiumization and aesthetics. For high-end products, there is a demand for premium closure designs with features such as embossing and metallic finishes to create a unique visual and experience, tactile experience. Consumer awareness and demand for authenticity. Consumers are becoming more aware of the risk of counterfeit products and are increasingly demanding assurances of product authenticity, influencing brand choices and packaging requirements. Rising alcoholic and non alcoholic beverage demand. Rising disposable incomes and urbanization in Asia Pacific, Africa, and Latin America are driving increased demand for bottled beverages, thereby driving greater demand for plastic caps and closures. In the next session, we would look into PET bottles and products industry. That's it for today. Thank you for joining this session and see you in the next 30-minute